Welcome to the Deep Dive. Today we're taking you on a really fascinating journey into Zengai Biotechnology Holding Limited.
That's right. We're looking at their recent fiscal year results, their strategic moves.
Yeah, and their latest annual report. It's not just some dry financial document, is it? It really offers a compelling look at a company making some, well, incredibly bold choices.
Definitely navigating significant market shifts.
Hmm.
And our mission today, really, is to unpack these decisions, understand the financial side, and, highlight how Zengai is positioning itself
For the future.
for the future, yeah.
Yeah.
In that very competitive veterinary vaccine market, we want to extract the key nuggets for you, give you that shortcut to being informed.
Okay, good. So before we really plunge in, maybe set the scene a bit.
Yeah.
Who exactly is Zengai Biotechnology?
Sure. So Zybt Biotechnology, they're a major player based in Jilin, China, veterinary vaccines.
Right.
They do the whole chain, R&D, manufacturing, sales. Been focused on livestock vaccines in China for over 2 decades.
Okay, so established,
Yeah.
very established. But their footprint is surprisingly broad. They're across 28 provincial regions in China,
Wow.
and they export to Vietnam, Pakistan, Egypt.
Oh,
And get this, they have 46 existing vaccines. Swine, cattle, goats, sheep, poultry, even dogs.
46. Okay, so yeah, a well-established company, but clearly not resting on its laurels.
Not at all.
Their co-CEO, Mr. Songlin Song, he called 2024 a transformational year. Mentioned strategic decisions and tough yet necessary shifts. That phrase alone just makes you want to dig deeper, right?
It really does.
What's the biggest, maybe the most surprising shift you saw here?
Well, what immediately jumps out, and it's genuinely surprising, maybe even gutsy,
Uh-huh.
is their deliberate reduction of swine vaccine sales.
Really? Swine. Isn't that their main thing?
Exactly. That's
Yeah.
what makes it so counterintuitive. For a company so reliant on that market, pulling back, most businesses would try to prop up their core revenue.
Yeah, double down. But Zengai explicitly said they did this to mitigate concentration risk from their biggest customers. They're actively pursuing what they call a healthier and more balanced customer portfolio.
So a long-term play.
Absolutely. Trading that immediate top-line revenue for kind of strategic resilience, it's a rare playbook, really.
That takes serious courage.
Yeah.
It's like intentionally stepping back from your biggest paycheck.
Yeah.
And despite these current headwinds, as he put it, they didn't pull back on innovation. They kept up the R&D spending, didn't they?
They absolutely did. And that commitment to R&D, that's a critical signal.
Right.
It shows they truly believe innovation is the engine for long-term growth, even when things are tough elsewhere.
Makes sense.
And this commitment, it directly supports another key pivot, expanding into the pet vaccine market.
Pets. That's huge now.
Exactly. Zengai completed clinical trials for 2 vaccines, specifically for cats and dogs. They clearly see this as a high-potential segment, a key focus moving forward. Makes perfect sense with the global boom in pet ownership.
Yeah, you see it everywhere. And the real, game changer on the R&D front, that has to be those Category I new veterinary drug certificates, right? From the Ministry of Agriculture and Rural Affairs.
Oh, absolutely.
They got 2 of them. Now, for those of us not, swimming in veterinary pharmaceutical details, what is a Category I certificate? Why is it such a massive win?
Great question, because this is where it gets really interesting for Zengai. A Category I certificate, it's granted for biological products showing significant innovation.
Okay. Innovative.
We're talking drugs developed for the very first time, either in China or internationally, nothing like it on the market before.
Brand new.
Totally brand new. And the profound benefit, this is the crucial part, they come with the longest monitoring period, up to 5 years.
5 years.
5 years. And during that exclusive window, no other companies, except Zengai, the original applicant, are allowed to produce or import these specific drugs.
Wow. So basically a 5-year monopoly, a protected market.
Precisely. It creates a strong technological entry barrier for any competitors.
Huge advantage.
Huge. It's expected to generate substantial economic returns naturally and significantly boost their influence in the industry. Think of it like a massive head start with a legally protected market. Powerful stuff.
That's fascinating. Okay, so those are the strategic shifts, big, bold, long-term decisions. How did that actually translate onto the balance sheet for fiscal 2024? That the numbers, reflect those transitional measures?
They certainly did. The financials definitely reflect those tough choices. Let's talk RMB, and yeah, for context, about 7.3 RMB is roughly a US dollar right now.
Okay.
Net revenues, they saw a noticeable drop, down 12.0%. Went from RMB 211.7 million in 2023 to RMB 186.4 million in 2024.
And that's linked directly to pulling back on swine vaccines.
Explicitly linked, yes, to the veterinary vaccine market adjustments and that intentional reduction in swine sales we talked about.
Okay, so the strategy at the top line, as expected. What about profitability? Did that follow?
It did. Gross profit also took a hit, decreased to RMB 91.3 million from RMB 117.5 million. And their gross profit margin, it narrowed from 55.5% down to 49.0%. They put that down mainly to lower sales prices and unchanged fixed costs.
Common challenge when you scale back deliberately.
Exactly. And the bottom line, net income, that was RMB 13.5 million in 2024, a really significant drop from RMB 37.5 million the year before.
Wow.
Yeah. And earnings per share, basic and diluted, followed suit. RMB 0.25 compared to RMB 0.69 in 2023.
Okay, so a pretty clear impact financially. But let's break down the revenue by vaccine type. That's where we should see the strategy playing out, right? The diversification.
You're absolutely right. Swine vaccines still dominant, but they decreased to RMB 157.8 million from RMB 188.9 million.
Right.
And crucially, its share of total revenue dropped from 89.3% down to 84.7%.
So a measurable step away from that concentration risk.
Exactly as planned. Poultry vaccines, they stayed pretty stable, around RMB 15.5 million.
Okay.
But here's where you see the diversification gaining traction, sales of other vaccines. They surged to RMB 13.1 million, up significantly from RMB 7.3 million.
That's quite a jump. What's enough?
Primarily driven by increased sales of vaccines for sheep, actually.
Interesting.
Yeah, it's still a small slice overall, but it clearly shows the new strategy is starting to yield results, starting to bear fruit.
Okay, so a calculated hit on the core business, but diversification is demonstrably starting. Did they cut expenses elsewhere to maybe offset those revenue hits?
Interestingly, no. Total operating expenses actually increased slightly to RMB 74.9 million. But here's the key thing, reinforcing their strategy. R&D expenses increased, went up to RMB 12.8 million from RMB 11.9 million.
Wow, so even with lower revenue, they spent more on R&D.
Unequivocally, it confirms that commitment to innovation, even during a tough financial transition. They're clearly doubling down on their future pipeline.
And what about their cash? Were they burning through it?
Actually, their cash position saw a slight increase. Ended the year at RMB 18.6 million, up from RMB 15.1 million. And if you connect this back to their long-term vision, look at their investing activities. Net cash used in investing activities increased significantly.
How much?
Jumped to RMB 27.7 million in 2024, way up from RMB 11.8 million in 2023.
Well, I have a big jump.
Primarily due to prepayments for intangible assets, think patents, licenses maybe, and purchases of property, plant, and equipment. Building things.
So more evidence of investment.
Absolutely. Active investment in R&D, infrastructure, expansion, getting ready for those new products and the capacity to make them.
It really paints a picture, doesn't it? A company investing heavily for the long haul, even while taking a short-term financial hit. But let's shift gears slightly, because some really exciting things happened after their fiscal year ended. Things really picked up pace.
They absolutely did. What's really noteworthy is their successful NASDAQ listing.
Ah, the IPO.
Yes. They completed their initial public offering on January 8th, 2025. Issued 1.5 million shares at $4 a share.
Right.
Plus, an overallotment option was exercised, bringing total gross proceeds to about $6.9 million US.
Significant capital injection.
Very significant. And their shares started trading on the NASDAQ Capital Market on January 7th, 2025. Ticker is zybt. That's a major step onto the global stage.
Huge step. And those category I drug approvals, they kept coming too, right? 2 more big ones in early 2025.
That's right. Shows that R&D engine is really firing on all cylinders. February 25th, 2025, they got approval for a live vaccine for Mycoplasma bovis, joint development with Hwazong Agricultural University.
Okay.
And then, March 21st, just a month later, approval for a pentavalent inactivated vaccine. This one covers 5 poultry diseases, including things like Newcastle disease and avian influenza H9.
Wow, a 5-in-1.
Yeah, developed jointly with Pool-like Biological Engineering. These 2025 approvals, they're major breakthroughs, reinforces their R&D capability.
And gives them that category ad advantage again.
Exactly. Remember that 5-year exclusivity? That's a powerful, powerful competitive edge stacking up.
It's really clear they're not just reacting to the market. They seem to be actively trying to reshape their position. Mr. Aiden Hahn, the other co-CEO, he laid out a pretty bold vision, didn't he?
He did. He talked about global market expansion becoming a central component.
Right.
The goal, to become a world-leading, trusted manufacturer of veterinary vaccines. He explicitly called international sales and global distribution a strategic priority.
Aiming high.
Very high. And the co-CEOs together, they summed it up well, they said, essentially. Though these transitional measures may bring noticeable short-term effects, we believe the long-term benefits will be enduring and substantial. We are building a more resilient and adaptable foundation to support our growth ambitions. It's a clear message, isn't it?
Yeah, they're playing the long game.
Definitely.
So, wrapping this up, what does this all mean for you, the listener? I mean, Zengai Biotechnology really stands out here as a prime example, doesn't it? A company making tough, deliberate choices for long-term health, long-term positioning.
Yeah, rather than just chasing those immediate quarterly numbers.
Exactly. They took a hit on their main revenue stream to diversify, while simultaneously doubling down, investing more in R&D for future growth. It's a bold strategy, counterintuitive, like you said.
It really is. And I think this deep dive into Zengai, it raises a really important question, relevant for any industry, really.
Which is?
How do companies balance that immediate financial pressure, the day-to-day demands, with the foresight, the courage to make these big strategic pivots? To invest in innovation that might hurt the bottom line now, but promises substantial future growth, resilience.
What does it take?
Yeah, what does it take for a company to not just react to the market, but to actively try and reshape its own future? It's a tough balancing act, maybe the defining balancing act of true leadership.